Hello, and welcome to Quaint Talk Show, where we decode finance and unravel the world economy in just a few minutes. I am Kiran, and with me, Vijay, your guide through this intricate world of money matters. Today's topic is Basel III Endgame. Hi, Vijay.
Hi, Kiran.
So, the US would soon be implementing the Basel III norms. So, what do you think are the main changes and challenges here?
Uh, yeah, Kiran. So it is expected that the Basel III would be implemented in around 2025. We have some time for its implementation. But in the meanwhile, there are quite a lot of changes uh, that the regulators have given. Now, in the US, there are three different regulators. You have the FDIC, the Federal Deposit Insurance Corporation, the OCC, the Office of the Controller of Currency, and also the Federal Reserve. And now, all of them, all the three, regulate the banking sector. Now, based on the Basel text, which is given by the BCBS, the Banking Committee for
Hmm.
Basel Committee for Banking Supervision, they have taken the draft or the suggestions of the Basel and made some modifications. One of the principal modification is with regard to whom they want these rules to apply to. So they don't want all the set of the rules to apply to all the banks. So they have classified the banks into banks of in terms of the assets actually. If more than $100 billion, they treat it slightly differently, and less than $100 billion worth of assets, they treat it slightly differently. The reason is because you don't want the smaller banks to be subject to these stringent rules. It would be a bit harsh, and most importantly,
Hmm.
they don't create any systemic risk. There are risks, but then they are
True.
not going to pose any systemic risk. So that's why the Basel Endgame, which the regulators have,
Hmm.
are calling it. That means the US version of the Basel. So the entire Endgame is nothing but it is the US version of the Basel.
Hmm.
Classifies these banks into two different categories, and these for the smaller banks, there is not much of a change, okay, because the Basel norms are not fully implemented. Even though they are implemented, the risk weights will be calculated,
Hmm.
but then there is not going to be substantial change to what they are doing currently. The real change is with regard to the banks which are falling under the large banks category. That means banks with the total assets of more than $100 billion. For them, there is a revised version. Earlier, for the calculation of market risk, just as an example, there used to be a standard approach and also a internal market approach. They used to be called as a internal market approach. That means banks can have their own internal models to calculate what is the market risk that they are facing. Accordingly, they can compute the risk weighted assets. Now, though this is good, there was a problem in this model. The problem is that every single bank will have its own models. There is a fear that they will game the models in such a manner that they have to post lesser capital.
Understood.
So if I'm a bank, then I will try to tweak my models. There could be a, I'm not saying that every bank is doing it, but
Hmm.
there is always a chance that my models would be, could be tuned in such a manner that I have to put lesser capital. So that's what we call as a gaming the models to suit the own this one. Because capital is the most expensive form of capital, or expensive, form of borrowing. You can borrow money, but when you raise the capital, it is quite expensive in comparatively. So that is the reason, uh, the advanced models or the internal models have that particular risk that banks can game it. So what the regulators are proposing now is something called as a new approach or revised approach or an alternative approach.
Hmm.
So they are saying that you can either go via the standard approach or there is a revised approach which you can follow. So the internal market models may not be permissible. So they have devised a revised internal model, which is which gives lesser flexibility for the banks to fine tune how they want to
Hmm.
compute the this one. Similarly, they have also changed some calculations with regard to the CVA risk. Earlier, the counterparty uh, credit risk and the adjustments for them. So the revised IM is going to take care of even also the tail risks. Earlier, the tail risks were not properly taken, but into consideration. But now, to account for the tail risks, because that is what the regulators have been seeing, that those unique risks that happen once in a while can take a bank down more than the known risks. So, for to account for this tail risk or sudden or unimaginable risks, they have made some adjustment. They call it as a revised internal models.
Hmm.
So those models will also be implemented. So these are the technicalities. It is a very long text containing quite a lot of features. So you have to take care into four different considerations for calculating your capital. You have to take care of a credit risk, market risk, operational risk, and also the CVA risk. For all of the four, there are new methods that have been suggested as to how banks need to compute. But summarily, if I summarize all of this, without going into the technicalities, essentially the industry feels that if they implement this end game proposals as it is without any changes,
Hmm.
of course, now the changes could happen because there are talks between the industry and the regulators to see to modify some of the changes that have been suggested by the regulators. Barring that, let us assume that no changes takes place, and whatever is the suggestions at this point of time that the regulators have given, if that gets implemented as it is, then there is a risk that the risk weighted assets or the entire risk will grow up by 129% as per one estimate. That means, let's say you are bringing in your entire risk is around 100, or you're bringing in, let's say, capital of $100. Now you might have to get around $229. So that means the requirement of the capital will go up, because if the risk increases, so will be
Hmm.
the capital that you have to put into the bank. So there is a fear that the new model, without any, if you don't alter it, if you implement it as it is suggested by the regulators as of now, then the total risk will increase by around 129% in terms of the calculation. That means banks will have to put in more
More.
money on
Hmm.
the table. As of now, most of the large banks have sufficient capital. In fact, they have sufficient surplus capital. Let's say they are supposed to put in around, let's say, $50 billion of capital. They are having 70 to 80 billion of capital, just as an example. Okay. So they have sufficient capital. But if the new rules are implemented, this sufficient capital, entire extra capital, will be the bare minimum capital that is there. And some banks might have to
Understood.
bring in more capital in the first place. So that is the
True.
challenge that is there. And also, with regard to the reporting norms and the implementation, all these will have modification that the industry will have to take into consideration, because they have built-in models and built-in mechanisms of how to do these computations. Now all those
Hmm.
will need to change and adapt to the new systems once it gets this one.
So, do you
So
believe that any changes will be further made to?
I think so, because the
Hmm.
industry is really working hard. There are some suggestions, uh, that the industry is trying to incorporate with regard to the calculation of the market risk and
Hmm.
also the CVA risk, because these are the main one. For operational and credit risk, I think there may not be much of a issue. But with regard to the market risk particularly and the CVA risk, there could be some kind of a so industry is looking at, have suggested some things. If those suggestions are implemented,
Hmm.
then I think the industry would like it. Okay. So as of now, there is concerns in the industry that if it is implemented as it is, then it could it could be issue, because they have to get in more capital.
Hmm.
They are willing to get it. There is no such issue. As I mean, the industry is not against these rules. All that the industry is trying to fight with the regulators, if I can put it in that way, is only to see, if there is any technical modifications with regard to the calculations or implementation dates or phases, and those things that they are trying to discuss. Otherwise, more or less, most banks are willing to implement the changes. They have been
Hmm.
implementing Basel rules, whether it is Basel II or even parts and parcels of the Basel III. They are already been implemented. It's just that the new changes that are coming up, those changes, they don't want to put in more capital. Okay, that is the main thing. So they are trying to see how they can reduce their capital expenditure, but still being strong, and
Hmm.
sustain, and something that is manageable. So it is a very interesting, topic, because 2025 is not far away, though it looks like 1.5 year.
True.
This one, uh, there will be some changes, as you rightly pointed out. There could be some changes, and we have to see those changes. Maybe we will have to revisit, or have another talk show in 2024, and figure out what exactly is the changes that have been are getting implemented, and what the quantitative impact of these changes uh, on the banks are. But it's a very nice area to particularly watch out to. But I must point out that it is not just the end game, though we are talking specifically about the end game. That is the question you have asked. Basel III itself is getting implemented all over the world, in various jurisdictions, in various forms. Uh, the US is more important than the other reason, purely because of the size of the banking industry.
Hmm.
Okay. So that's why it has, probably that's the reason we are discussing this. And but I think we should also keep an eye on the Basel III implementation even in Europe,
Hmm.
and also in the UK, because those are also significant markets, um, and also Japan, if possible. I think we have to look into how those are getting implemented and what are the changes that are happening. So it's an interesting topic, and also this one, I think we will keep a eye on the developments in this regard.
Okay. Yeah. Thank you, Vijay. Thanks for sharing your views. That ends our talk show for today. We will come up with another topic. Until then, have a nice day. Thank you.